Good morning, everyone. Happy Friday. How are we doing? Hey, Sergio. Buongiorno. What's up, John, Marcus? How you guys doing? Hola, Juan. ¿Qué pasa? I'm working on my language skills. Oh, man. So, I'm gonna apologize up front. I slept like 2 hours last night. I had this weird coffee with all this, I don't know, it's got like these health things like lion's mane and all this crap, and it wired me out. I had it about like 2 in the afternoon, right? And I didn't go to sleep till like 3 in the morning. I was just wired. I was so wired I started watching those alien documentaries. So check my work, okay? Right? It's your job. I'm warning you guys. You got to check my work, okay? And suffice to say, I will be trading the micro this morning. Oh, that was brutal. Brutal. What's up, Ian? How you doing? Hey, Stell. Whew. Okay. Overnight inventory is long, believe it or not. Now, this chart, this is a TPO or market profile chart. And for people who are used to it, you can automatically see what's going on. Now, what I'm going to do is I'm going to break this down in a half-hour candle format as well. So what we've got is this is the old half-hour candle, right? And you can see really clearly a couple of things, okay? Well, number one is that you can see all the inventory, right? All of this, those people who are long over 61 are trapped, and they're selling. And yesterday there was a bid at 77.50 all day. Now that bid has dropped down to 77.30. But you can see this kind of trading, and I want you to make note of this, okay? This is where half-hour charts are really, really helpful. Even though if you're a shorter term trader, you might not trade off of them, but they tell you what's going on, right? Right? We need to know what's going on in a market. Otherwise, we're always upside down. We're trading in the wrong place. We're trading at the wrong time. We're expecting things that we shouldn't expect, right? Sound familiar? Listen, I went through the same spanking machine that you guys have gone through, right? I'm not special, right? So everything that you've encountered, I've encountered, right? So this is short covering. The market goes and makes this ridiculous new high, right? And then sells off. So what happens is a ton of people come in and start covering here. But when we lose that 77.50 bid, now let me just go into what it means to lose a bid, because losing a bid means the buyer is at 77.50. Yesterday, they're like, you know what? The sellers are getting a little desperate and they're lowering price. Let's drop our buying down to here between 30 and 40. And so now you have two areas of short covering. And today, right, remember they raised margins because we have news, right? We have news at what, 8:30 a.m. Eastern time. What is it? somebody to do jobs. U.S. unemployment report, right? Hourly wages, blah, blah, blah. We got a Fed speaker at 10. So they raise margin on us, which means there's less people. This is total institutional business, you can see, right? This is very, very common. So this kind of buying, I don't trust. I'll trust this buying for maybe from scalps, but I'm not going to put a position together here, right? Until if you're a large trader, I always try and do an analysis for us, and then I do an analysis for the, a couple of hundred contracts to 2,000 contracts, 3,000 contracts, folks, because we do have a few of those, right? They're very quiet because they're always working, right? So if this turns out to be a look below and fail of 77.52, I would not go position long size until we reclaim 52. Right now, the type of buying that's in this market, given this monstrosity of a day 3 days ago, right? The fourth was just weird. I remember sitting in Spain and Raj telling me, Raj or Jam, one of the guys, they were like, this thing's got 7 sets of single prints, right? So there were 7 clearly defined short positions, and they were here, 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 and here. Now we filled a couple of them, right? But this short position under 77.21 is the market is fairly bid there, right? So what you want to do until you get some kind of clear direction and take out these lows. If we take out these lows, we'll be looking for the market to fill these single prints and come and test that 77.06, right? Let's see if we can do that when London opens, right? I myself am short biased, right? But I will trade to the long side if my bias is wrong. Let's go take a look and see. So these are the single prints that we're talking about. These are very, very clearly defined short positions that market profile helps us define. And you can see them on a half-hour candle chart. You just have to look harder, right? So we still have 3 short positions underneath us. And then we've got this short position, which is our gap, right? Got a big gap here. And this gap, well, that's a massive short position, okay? It's really massive because what this is this is where there's no supply. What you could buy on the 3rd at 76.36, now you got to pay 76.56 the next day, right? So this is a massive, massive short position. I will do, after I get a couple hours of sleep, I'll go do a video on market structure and being able to analyze it on candles as well. Because contrary to popular belief, you don't have to have TPO. It's nice, it's a beautiful thing, but you can waste a ton of time, right, trying to figure out TPO charts when you only need like 2 or 3 things from them, right? Number 1 is single prints, number 2 is poor high, poor lows, and number 3 is to really quickly see where the inventory is, right? So you can see the blue stuff is the inventory, right? Keeps things really, really simple. And my goal is to help you simplify your life. I don't want to make your life more complicated, right? Like a lot of trading rooms and a lot of trading instructors, they love to overcomplicate things so they look smart, right? I don't care about looking smart. I care that you make money and that you don't lose money, right? So that's my thing, and I want you to be able to trade with a lower level of stress. So let's go see. I've got these. 1 minute candle levels. Hey, Badir, how you doing, man? Long time no see. Good to see you, brother. Hope all is well. So overnight point of control is here at 33, right? Which makes sense. This is our cost basis. The blue is the cost basis. So if you went and drew a volume profile, sorry, chart's a little dirty. If we go and draw a volume profile, you'll see this big chunk of volume here. Now we got to do something with that. A lot of that is short covering, but there are quite a few longs in there, right? So it would be good to take the market higher if the order flow exists and sell, and that's exactly what's going on here. So they're taking this 27 to 34 product and selling it between 34 and 38, right? That's all they can get for it tonight, right? There's not enough buying because they raised margin requirements. So there's not enough people coming in the store. It's like we cut everybody's credit card in half, right? Remember that song, Daddy Takes the Credit Card Away, right? So the clearing firms decided, okay, there's going to be news. Let's raise margin requirements that'll reduce the number of traders. So you're not getting that big follow through that we're used to getting. That's why it's slow, and that's why you have a smaller range. So when you have a smaller range, what you want to do is you want to take those trades that are like really obvious. The really obvious trade is look below and fail. Now, I should have turned on the computer and done this balance at 3 in the morning. There were like three good trades here, right? And there was one here, a fail to look below. So out of all of this, there's 5 decent trades. Shorts, on the short side, the look above and fail, sell that, look above and fail. But you can see that the bids have moved up from 27 to 30. Now the bid is just above VWAP at 34. So the bid's been moving higher. That's why you guys get trend lines. Hey, AZS, how you doing? Good morning, folks on YouTube. So you'll notice tonight, or this morning, wherever you are, that it's going to be slower. Slower, smaller range, less follow through. So that means for you, just manage your expectations and don't go crazy, right? Hey, Juan Alberto, ¿qué pasa? How are you doing? Right? So be careful because margin is the brokerage firm's way of telling you, hey, things might get a little hairy. So they raise the price that you need to put down. So for example, the micro usually at AMP, it's like $40 to trade a micro. Tonight it's $594. And usually it's $400 to trade a mini, and tonight it's $5,945. So when margins are higher, what they're doing is they're protecting their capital because you're using their capital, right, to trade. So remember that. That will mean that there's less follow through. So when you're taking trades, make sure you sell into strength, right? So the trades that we like are when the market looks below 77.27, comes back up, we buy 28.29, put our stop at 27, sell a little at 30, sell a little at 32.33. Same thing here, look below and fail, long, stop, sell some, sell some. And you know that the sellers are going to step in here. Now that they've got the inventory, we're doing this. So this was kind of a look below and fail, but notice how long it took. Here you got 3 minutes, here you got 2 minutes. Here it's like 5 minutes to make that move higher, 5 or maybe more. You see, the number of candles that it takes to move tells you, look how small these candles are. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You had 10 candles 10 minutes before the move started here. Now let's go mark the sellers because there's going to be a seller 30, right? That's just, sorry, 39. See? So if you are long, for example, say you're long 34, 35, 36, make sure when London opens that you put your sell orders out because everybody else is going to sell at these levels. See how they sold there, right? If they sold there before, they will sell there again. Why? Because they're selling size. And if people are buying that level, I'll sell at that level. Make sense? This way, now you know where the sellers are. You know where they stop selling. You can trade in between if the business suits you, right? The business has to make sense. So now that you know the conditions are a little slow, not as many customers in the store, right? Trade small, right? Trade, trade, small size. Don't get out on a limb, you know? Let's see if we can get some upward movement here. But right now we got that 39 seller. They're not going away. As we come back, I'll be kind of looking for bids here because there's our little position before the move higher. You can see everything on a 1-minute candle chart. It's just everybody's told you that you need to memorize all these patterns, which are completely useless. Because people who trade patterns, there's maybe 1 out of 100 that actually makes money. Because it's so hard to execute what you don't know. You know what I mean? If you don't know what's going on, how can you possibly be expected to make any money? It's like telling you to go be a brain surgeon and not make you take anatomy, right? You're going to be doing brain surgery at the ankles. That's not going to help anybody. It's different business than that, Ian, right? That's good, right? You see the candles are small, choppy. You can see the sellers have moved from there to here. See the top of those two candles? The sellers have moved down because there's not enough buying at 39, so they'll sell 38, they'll sell 37, they'll sell 36. Right? Their cost basis is under VWAP. Right? It's right here at 33. I would like to sell 38, but if you come on and say, hey, listen, JJ, I'll buy 36, sold. If I'm long 33, I will sell this thing all the way down to 34 just to get rid of my inventory because it's a slow night in Walmart. Right? You want to make sure you get rid of the donuts before they go stale. Very important. Right? So this kind of trading right now is not really conducive for us, which is okay. It's Friday, right? Take it easy. After the news comes out, there might be some better trades. There might be some better trades in 2 or 3 hours. But right now, the trading, I mean, let's be honest, the trading kind of sucks. This way, so now you know, okay, look, it's not that great, right? It's like when you're young and you go to the nightclub and it's full of guys, right? You're like, yeah, maybe we'll come back on another night, you know? So I've tried to use analogies that will help you guys visualize the business, right? Not the best time to do business right now for us. If you're a wholesaler, great, right? But for us, there's no movement that is worth us putting capital at risk, right? Here's the thing, by not trading bad markets, you're going to do yourself a favor. Number one, you're not going to take bad trades and lose money. Okay, that's simple. But when you start taking bad trades and losing money, you start getting frustrated. And then all this weird stuff like revenge trading and all that stuff comes into play where you should have not been doing business. If you knew, hey man, this sucks right now, I'm going to go to the gym. I'll come back and see. And you know what? I have to be very picky about where I do business on this chart because I worked hard for my money, right? So I'm not just going to throw it at the market. I mean, hey, Ken Griffin has enough money already, especially after last week after he trounced that poor kid. You know, he doesn't need your money. Don't just give it to him. Yeah. Sergio, you need to do business when it suits you, my friend, right? You only do business when it suits you, not just because business is happening, right? You have a certain thing you do, like in this market, that look below and fail trade, that's your bread and butter trade. It's not going to happen very often. So if you know not to do business here and you wait for this or you wait for this, then you're waiting for business to suit your trading setup, which is the way you do business. Now let's see if we can lift over 39 and print the 40s. Right? We have to do something with all this, right? We got to get rid of these donuts up here. Now, if we have enough buying, if we'll take that stop. See, there's a lot of people who are short and they're using 40 as a stop. If we can take that, we can take out the overnight high and then we can go tickle the 48s, right? Do we have the customers to do it? Let's see. Do you see how the market moved up and then came down? As soon as we got up to 40, the offer moved lower, right? Now it's moving higher. They see buyers. Let's see if we can run that stop. If we run that stop, it'll trigger some buying because anyone who is short over the last couple of hours will have their stop here. Let's see how many stops we can run. So we get one tick. That's pretty weak. So say if you were along 37, right? If you were along in this 37, 36 area, I would be selling here. That's just me. You can hold a runner and put those if you hold a runner, you know that if they take the overnight, put a runner here and a runner here and a runner here and just load the ladder so when it goes up, it'll take you out. Nice work, man. Nice. See, the wholesalers will sell here because that's where the buyers are. You can see them selling into it. Excuse me. If we get enough buying, they'll lift the offer over 40 and 3/4, and you'll get a print at 41. London usually likes to take the market lower and get some cheap inventory. So if that does not happen, it means London traders are covering. So this buying really isn't, it's not dependable, you know? That's the problem. The buying is not dependable because it's coming from short sellers. And as soon as the short seller sees a little bit of size come into the market for sale, they'll immediately drop their price to try and take advantage of that. Watch. They will only buy if they're forced to because they have to compete with the buyers that are coming in. That is what order flow trading means, right? Order flow trading means you're competing with the buyers that are coming in or the sellers that are coming in. That's all it is. It's just a fancy way of saying customers. Let's see if we can hold 77.40. That's the key to higher price. Got to be able to hold 77.40. Look how small the candles are. That's telling you, man, it's a slow night in 7-Eleven, right? Right. It's slow. If you are short, if you're shorting this move, your stop is 41 quarter. You don't want to spend much more than that. Say you're short 40, your stop's 41 quarter, and you'd be looking to bid probably right here at 38 half, and then at 38 to see if you can get anything. It might go sideways here in a really annoying small range. That's distribution. So once again, the chart on the right, this market profile chart, this is a map of the city, and then this is the map of the neighborhood we're in. So when you want to put on a trade here, you go into the neighborhood and you go, hey, are they going to shank me here or is it safe to do business, right? That's all it is. There we go. There's that 41 and a quarter. This is one of the worst type of price actions to short. Why? Because all the inventory is underneath us. And the price action is really slow and grinding, so it looks weak. But it's not. If it was weak, we'd be down to 38 already, right? It's just slow. It's not weak. You can see that that 40 bid is being held. Very simple stuff to help you trade in the right direction or to avoid taking bad trades. So, folks, it's August now. For those of you who are serious about your trading, you should come check out our room. It's quite well priced for what you get. I promise you, you will learn more in a month than you will in 10 years anywhere else. We give you all the tools to make money in a simple way. All you need is a little discipline and the ability to do the work and draw a straight line. That's really all you need. Okay? You don't need any special software indicators, right? I can teach you on anything. The other thing too is those of you who are serious, who want to level up their trading, I am taking spots for my next one-on-one coaching. Reach out to me. I am available. I offer a lifetime mentorship program. Let's see if we can take out the overnight high. See how they sold into the overnight high? Looks weak, right? So those of you who are like die-hard shorting, if you're short 42, 41, your stop's just right here. If you lose that seller, it's going to pop. So that's your backup if you're a short seller, right? That's your backup. So very simple. If you're short in this area, your stop is here. You don't need to have your stop all the way up at 48. That could get very expensive very quick. In a more normal, fast market, this is a look above and fail of the overnight high, which is a perfectly valid trade. Given that the price action is insanely slow, I haven't taken a trade yet this morning, right? Also, the fact that I got like 2 hours of sleep. So I'm not operating at my best. I'm not really firing on all 12 cylinders. Put a bid at 39 and 3/4. See if you can get filled at 39 and 3/4. If you're short 3 at 41, 41 and a half, go throw in a bid at 39 and 3/4. If you can't get filled, cover your position. Hey Dave, how you doing? Once again, our goal is to help you simplify your business, make you simplify your business, make you profitable. That's all we want. That's the goal. Man, it's slow. It's like watching paint dry. But, sometimes it's a slow night, right? You're selling hot dogs outside the club and there's nobody in the club, right? So these guys are going to and ladies will get rid of their inventory wherever they can here. Any questions? September is going to be wild. Okay. You're seeing hints of it already. You know what I mean? September is going to be wild. September, October, November. It's going to be a crazy year end. Mark my words. I'm telling you right now. I told you guys that this market would get harder to trade in January, and it has been, right? But we are profitable because we're doing business at the right time and we're not over trading, you know. Soon, Dave, soon. I've always wanted to go to Australia. See how slow it is? Don't waste your money. No, your cost basis chart doesn't have to match mine, Nate, right? That's why you're supposed to practice drawing those cost bases. Do 100, 200 of them. So when you see a chart, you automatically see it. Now remember that document I sent you guys, right? The 5 steps. Just do that every day so you get in the habit of doing the same thing every day. So the first thing is you draw your cost basis. Then, second thing, you sit and watch and see whether the levels work, right? Third thing, right? You take a trade with a couple of micros to see whether or not your brain and the chart are dancing together. You know what I mean? Right? It's like when you're dancing with that pretty girl and you're stepping on her toes. It's not going to be a good thing. So make sure your brain and your chart are working together. Okay. If they are, then you can size up if the business warrants it. But if the business at this time does not warrant you trading larger size, sizing up, if it's really slow, don't. If you take a couple of bad trades and lose 20, 30 bucks, stop, reassess. There's something that you're missing. That's why we give you a framework in which to take trades so you can get feedback from when things don't work. You can get feedback from when things work. And this way you have what we call awareness. I hope when I go to Australia it's to pick up my Ford Falcon. How can you tell who was influenced by the Mad Max movie, right? That's like one of my that's a grail car for me, right? 71 Ford Falcon. Yeah, we only want to do business. You need a feedback loop, right? So you can course correct, right? It's like having a compass on your boat. You're off course, turn the wheel, right? We need to give you practical information, folks, so you can actually make money. There's no use trying to teach you a chart pattern, right? Or try and sell you some software that shows where the big traders are trading. You have no idea what kind of business they're doing, so you have no idea why you're trading there, right? This is the simplest way to make money without giving yourself a bunch of gray hair. Is it easy? No. Okay? Execution, excuse my language, is a bitch. Because just as soon as you start getting good at executing, the market changes. So the feedback loop that we build for you, which is simple, right? It allows you to go, oh, crap, this isn't working. Something's off. And then you stop trading and then you look and you're like, aha, okay, I'm going to wait, right? Or I was too early, right? Execution is difficult. You know, it's difficult because the, the agenda that creates the order flow that you are serving changes all the time, day to day, minute by minute, right? Somebody could come in with an order right now to sell 5,000 contracts. Somebody could come in right now to buy 3,000 contracts. So you never know. So you have to have a framework that's simple, not based on all this crazy stuff, crossovers and this and that. You need to know the business reason why you're doing business, right? You're buying because there's no supply and you're going to be a supplier at higher price. If the price goes below the price that you bought it at, your inventory is mispriced, right? It's very simple. Your trade plan should be maybe 2 or 3 sentences. I look at Twitter and I see people. 2 days ago, I saw a guy on Twitter, his trade plan looked like the schematics for a cold fusion reactor. I was like, Jesus, how are you going to trade that? It's a good chart trader. What you want to do, chart is good. Sorry, it's in. So you want to color code the zones so you have a quick reference. It sounds Mickey Mouse, but it's true. Because if you just look at this thing and you may be wanting to buy here, you're thinking, oh, maybe I'll buy a breakout. Then you go, oh man, the cost basis is under 34. They're in distribution. You know what I mean? So just for now, cost basis blue, 2 up green, 2 down red. Got it? Let me drag this over. So this is your chart, right? What you want to do is get rid of this, right? Clean that out, right? And then go and draw a nice balance. You've got a high and a low, and you're using value area high and low, but you want to go and draw a balance zone, right? So you want to go and draw a balance zone and then double it to the upside and then double it to the downside. You see what I'm saying? So what you want to do is, there's nothing wrong with your chart, but just get rid of these volume profiles. You don't need that, right? It'll clean up your chart quite a bit. Does that help? Where'd he go? The less stuff you have on your chart, the better. Because execution is what you want to focus all your energy and attention on, right? The more stuff you look at, the harder it is. It's like you're in a street fight and you're wondering about the weather in Fiji. Next thing you know, you get whacked on the back of the head with a table leg. Not a good thing, right? I used to use the term situational awareness, but I can't after last week that kid went and blew up his fund. So when you say situational awareness, everybody laughs now, right? Oh my God. Ah, he's back already, you know? He already went and brought in another 400 million bucks. There's a lot of people with the money out there that would stake him, right? If I had that kind of dough, I would stake him. I would say, just, you need an old person like me to come and sit next to you. You do your thing, I'll manage your risk. Because he just has no idea how to manage risk. And the other thing is, he has no idea about how people in the industry prey on you. Because what Ken Griffin did was he was talking to the prime brokers who have very loose lips and told him that this kid was over leveraged. So he started shorting the stocks that this guy was long, forced the scramble, right? It's like when you force Brady out of the pocket, right? You force the scramble. You force the quarterback out of the pocket. The pocket is your margin, right? What's his name? Leopold. I'm going to screw up. The kid who lost $30 billion last week, trader. He's 24 years old, right? So Kenny Griffin, right? Because Ken Griffin's the biggest guy on the street. So all the prime brokers talk to him, right? And they're like, "Hey, psst, psst, this kid, this kid is like really, he's out of control." So Kenny goes, "All right, what's he long?" Right? And they'll start shorting those stocks, force a margin call, and then buy into it. Right? Buy the position, take the kid out, run the stuff back up. This is the oldest trick in Wall Street. It has been going on for 300, 400 years. But this one was easy, Sperry. You didn't need Congress to sit down and close the market. This was like, you know what this is, Sperry? This is like when you have that like bully on the block and his name is Gooch, right? And he takes the kid and he holds him upside down and he shakes the money out of his pockets. That's exactly what happened to old Leopold. He'll never forget that lesson, right? He just got taken out and given a good beating. Welcome to the market. He'll be all right. I mean, hell, what were you doing when you were 24? You weren't managing $45 billion. I know I wasn't. So good for him. He learned his lesson. He'll be back. Right? There's a man in Canada who used to own one of Canada's largest brokerage firms. I cannot say his name. But what he would do, this is how he became a billionaire. Check this out. He would look at the positions his brokers were holding, okay? And the ones who were heavily margined, right? The ones whose clients hadn't paid the bills yet, what he would do, he would start shorting those stocks, right? So he would short these stocks, right? Everybody would sell, and then at the low, he'd call his broker and go, "Hey, you know what? You're offside. Your client either needs to wire 300 grand in or a million in today, or you got to sell them out." Client bought the stock at $3. He's selling them out at 30 cents. This guy covers at 30 cents. He's short at 3 all the way down to 30. He covers. Now check this out, right? And you wonder how they do this, right? If you ever see Wall Street, when the guy's buying Anacott steel, he'll say, start buying Anacott steel across the board, use the offshore accounts, and keep it quiet, right? So they'll short from offshore where nobody can see it, okay? The Canadian guy, he would short the stock down to 30 cents, and then he had a buddy, he had a deal with the stock exchange where they would go and delist the stock. So then he would never have to cover, and he never had to pay taxes, right? Never have to close the trade. Huge money, right? That's how you make hundreds and hundreds of millions of dollars, billions of dollars now. So, yeah, that's it. And that's why I always tell you guys be careful trading at month end, because that's when these things happen, right? That's when these things happen, right? Because the end of the month is when you have to pay your bill. That's why you'll see the AI stuff sold off, and then all of a sudden it pops back up, right? So now you know how it works. Agreed? Exactly, Dave, right? But a trader who's not intelligently long-term greedy, right? Like they wait for their moment and then they strike. It's like a lion waiting for the prey. Or, the alligator when he waits at the watering hole for all the buffalo to show up and he just grabs one and pulls it under the water. That's how you have to think about your trades. So you don't waste your time trading this crap. So you wait for when you see a clear edge. And an edge for you means it goes under a level and comes back up. You go long, you put your stop here, sell a little bit, sell a little bit. Make your money and then take your money and don't trade again. When you're starting to learn how to trade, don't overtrade. Take your money and learn how to keep your money. We'll teach you that in our room as well, right? We'll teach you that in our room. Okay, folks, I've kind of gone on a little bit too long, right? Thanks, everyone. Have a great morning. Come visit us at tradingsyndicate.org. If you need to learn how to trade, reach out. I'm here. Okay? And this is the only room where there's no BS. I'm not trying to sell you anything. We're just going to teach you the business so you can make some dough. And if I don't see you at 9:15, have a wonderful weekend. Have a great weekend. Stay out of trouble. And we will see you Monday. And if you're around this afternoon, I do another stream at 9:15 a.m. New York time, which is 2:15 p.m. UK time. Thanks, folks. Sorry I've got this cold, so I kind of sound a bit like a duck. Have a great, great morning. Thanks for being with us. Bye for now.